Hello, everybody, and welcome to a new episode of the Green Automation Podcast. Today we have Michael Carpentier on our as a guest, and he works at Vesta Equity. He's gonna give us some insights into what they are doing, how they are doing it, and why they are doing it. So, Michael, thank you very much, and welcome our on the podcast.
Richard, thank you for having me on your podcast. I'm looking forward to talking to you about what we do at Vesta Equity and how we're trying to essentially revolutionize the home equity space and provide homeowners access to their equity debt free and give investors access to this very robust and stable asset class to earn yield on it and get a great return. It's an asset class they've typically been locked out of.
All right. So tell us a little bit, when was Vesta Equity founded? Why came the idea to leverage some of those new technology like blockchain and AI? Let's start with that.
Well, that's a great question. So it was an evolution. I've always been personally very interested in real estate from a very early age. Bit of a frustrated architect. I should have gone into architecture, but I never did. But I've always been fascinated with that aspect of the economy. And technology has also been something that's always been an interest of mine. I remember when I was 16 years old, I bugged my dad to death to get me an Apple IIe. And when I look back on that, the staggering cost of what you got for for essentially the capabilities of a modern day phone now, a smartphone, was pretty significant. But I was always fascinated by how technology could be deployed in ways to solve problems or create new opportunities. And when Satoshi's white paper came out, I grabbed it, read it, and thought, "Wow, this is amazing." But how can it be applied? Obviously, the quick reaction in the market was to launch cryptocurrencies, etc. And it made
Yeah.
sense. It's a use case of blockchain, but it also lent itself to a lot of speculation and a lot of nefarious offerings. And I felt where this could really be applied is into something real. Take that real world asset that's typically been analog and digitize it. And blockchain offered a great solution. So I was looking into where this could be applied as a use case, and I, given my fascination with real estate and from things I was reading at the time, I came across this idea that why can't you just take the equity in a home and essentially tokenize it and make it accessible to the homeowner, allowing them to sell that equity and allow investors to partake in that asset because it's the type of asset that's very stable. A lot of investors need that in their portfolio. You should always have a balance in your portfolio of less risky assets and
Hmm.
more risky assets, and that makes sense. It's a balanced
Yeah.
portfolio, and real estate provides that. But unfortunately, in that space, the only way for homeowners to access their equity has typically been debt. It's really
Yes.
the only instrument we know of. In fact, it's really the major instrument that most consumers have at their disposal. And it seems odd that if you own a home, especially if you spent 30 years paying off a mortgage, and now that equity is yours, you can't tap into it without going back into debt or selling the asset. So that's a pretty, you know, black and white scenario there.
Yeah. Yes,
Where,
it
where's,
is.
where's, where's the alternative? And likewise for investors to tap into that asset class is not easy because it's first of all highly distributed. It's all over the place. It's not
Hmm.
centralized. There's no way of gathering all the information into one central location. Investors are not about to start tapping on people's doors and saying, "Hey, I want to invest in your home. I'm going to invest in your neighbor's home," and so on and so forth. It's just the barrier there is too high. So we felt by bringing these two concepts together and providing that new way for homeowners to tap into their equity, we could create a real significant opportunity. There's a massive amount of untapped wealth in real estate. Globally, the market's worth $278 trillion, dollars, which is very significant. It's 134, roughly 134 times. I mean, Bitcoin keeps going up and down, but roughly 134 times the value of Bitcoin. And you see all the press that Bitcoin gets, yet there's something here that's far larger and far more significant in scope and scale that has incredible potential for both the homeowner and the investors. It's essentially it's essentially value locked. It sits there idle. It may appreciate in value, but what's it doing? It's not putting money in the pockets of the
No.
homeowner, and it's not putting money in the pockets of the investors. and it's not putting money into the pocket of the economy. It just sits there. So imagine unleashing all that value, all that wealth into the economy, what it can do. And that's part of our mantra, is to create that opportunity, to create that wealth, give homeowners the opportunity to leverage what is rightfully their asset, and they should be able
Hmm.
to leverage in a way that they deem fit, and give investors the opportunity to tap into this. And what investors can then do with that wealth, and they could be funding businesses, they could be doing all sorts of things with this wealth, and creating really compelling opportunities for the economy at large. So that's really fundamentally, in a really long way of telling you how I discovered it, went into it, and how we've evolved it. And we see significant upside in the next 10 to 15 years in this space. And we're really
Okay.
looking forward to taking this business not just from its North American origins, but also take it globally eventually.
So why blockchain? I mean, you mentioned, you read the paper from Satoshi and
Yeah.
you got interested, but what does blockchain bring to the table that other technology or traditional ways do not?
I mean, you fundamentally, if you really wanted to and really love paper, you could build this whole business on paper.
Yeah.
Very detailed, handwritten spreadsheets. But the ability to scale and bring those economies of scale to bear would be very limited. It would also be open to mistakes and potentially fraud and whatnot.
Yeah.
And then the next level is to take it to a more technological, or what I like to refer as a more TradFi model, where you are leveraging technology, databases and whatnot. But that still fundamentally doesn't have the scalability of what blockchain brings to the solution. It's not just the scalability, it's the immutability of data. Intrinsic in all of this is data, right? It's an
Yeah.
asset. It's an analog asset because it exists in a physical world, and you're taking those elements and you're transcribing them into a digital format. And that data needs to be immutable. Once it's brought on chain and it's verified and brought on chain, that immutability of that data brings certainty to the transaction, and it brings certainty to the investment. So an investor can look at this and say, hey, this is a single source of truth. I can trust this data. It has been brought on chain by verified sources. It's now on chain. It cannot be altered once it's on chain. And
Hmm.
you can imagine in a still technological orientation where the data is stored on Excel spreadsheets and PDFs in a data room, that data can still be manipulated. It's not immutable. Yes,
Yeah.
it's digital. It's in a PDF. It's digital. It's in an Excel spreadsheet. It's digital, but it's not immutable, and it can be open to interpretation. It can be open to mistakes. It can be open to fraud. And those are elements that investors need to worry about. And it's also things that homeowners need to worry about too. If they're going to engage in a transaction of this nature, they need to know with certainty that A, they're going to get the money, that the titling issues on the back end are going to be proper,
Yeah.
there's no fraud on title. And all those elements can only really be executed effectively on chain. And
Okay.
it's a technology that takes everything to the next level. And then when you think about it, when you start deploying AI needs good data.
Yeah.
AI needs immutable data because AI will take any data and ingest it and produce some result. But that result could end up being erroneous. So
Yeah.
the marriage between blockchain and AI is perfect, because AI to act and execute the way it should execute with no error needs data that's immutable in order to be able to do that. And the marriage between the two is very, very significant. And that's why we see those two factors playing a major role in the evolution of this marketplace. You need the two in order to be able to execute and scale this and bring the value to the consumers and investors that they rightly deserve.
So can you explain to our audience and even to me how your company use a technology stack to achieve these results? What does it take for your company to be able to offer those services leveraging those technology?
Yeah, it's a significant undertaking. First of all, you need a core team that understands the technology.
Yeah.
And then the single, no, I wouldn't say the single, one of the most critical elements in that decision is who's going to be your blockchain partner. Right now, there is a far far larger scale of L1s and L2s than I ever expected. I thought the dust would settle and we'd end up with a handful, but it seems every day I open up my laptop, there's a
There's a
new
new
L1
one.
or L2 specializing in this, that, and the other. And not to say they're not good and their concepts aren't good, but that choice you make in partner is extremely important. And
Yeah.
we did look at a lot of different L1s and L2s. We built some platforms on some L1s, L2s to see how it would work. And we weren't satisfied with where it was going. And we ended up undertaking a significant amount of research into a variety of different L1s and L2s. And we ended up settling on a company called Provenance. And
Okay.
Provenance was purpose built for financial services. And it was originated by a company called Figure Technologies. And Figure lending, which is an aspect of Figure Technologies, the two are going to be now merging. But Figure lending is North America, sorry, not the world's, is North America's non-financial financial institution offering HELOCs. So they're the largest non-financial institution. So they're behind banks and stuff like that, but they're the largest non-financial institution offering HELOCs in the States. And that's very significant. They're processing $700 million a month roughly in HELOCs, all on chain. And it means that they can take this and cycle it through far quicker than their peers. So
Yeah.
the
Yeah.
banks and other financial institutions not doing this on chain. So it was part of that analysis that brought us to that conclusion. We had to work with a chain that understood financial services. There's a lot of intricacies involved in this in terms of, flow of capital in, flow of capital out, rails in, rails out when it comes to transactions is very significant. We deal primarily with financial institutions. So how is that money from the financial institution going to be brought in securely into the ecosystem and then that
Hmm.
fund dispersed to homeowners?
Yeah.
Likewise, when homeowners settle house sales or some other aspect of their life changes and they want to exit from the agreement and they want to settle the agreement, how does the flow of capital come back in and how is all that managed? Those are pretty significant because they have to be done in a secure way. And when you've got two very different types of groups, you have homeowners who are less technologically sophisticated and really don't care that this is on blockchain.
Yeah.
How do you build UI and UX for them to flow into this and have them using a blockchain grade wallet without them really having to worry too much the fact that it's on blockchain? So it becomes an executional detail. So you have to factor that into your build as well. You want to build this in an environment that's easy for homeowners to understand. Like their phone, they don't care if it's 5G. They don't care the technology that's behind the liquid crystal display. What they care about is my phone looks great, it takes great pictures, and I never have to worry about it. I've got great bandwidth all the time. We have to
Yeah.
create that same experience for homeowners. They just want it to work. But investors need to know it's secure. They need to know that if they're funneling in tens of millions of dollars, that tens of million dollars is going to be done in a secure way. So you're dealing with two different user groups that are very different in their terms of their requirements. So you have to factor that into the build as well. So when it comes to an investor, you're really looking at like a flow of capital through a platform like an Anchorage Digital, right? Where it's highly secure, it's institutional grade, and the investor's confident that their money is going to be held in a secure manner and flowed out effectively.
Hmm.
However, it's not that case. You don't need that for a homeowner. You're not dealing with the same sums of money, so it's less of a concern for them. It has to be secure, but it doesn't have to be on that institutional level for them from that perspective. And then, of course, there's the other peripheral elements. How is this going to integrate with your contact management system, your CRM?
Yeah.
What data goes on chain? What data doesn't go on chain? The data that doesn't go on chain, where is it held? Who has access to that data? Because anything you put on chain is in the public domain, right? So you really want to limit that to transactional details, underwriting details, and that's it. You don't put personal information on chain. None
No.
of that. goes on chain, but that personal information needs to be held somewhere. It needs to be held in a secure environment. So those are all additional factors, and that's when you start bleeding into the Web 2 world
Yeah.
from the Web 3 world, because the CRM needs to house that information. So how does that data go from there into your CRM? And then how is that flow of information managed? And you have to also make sure you comply with all the privacy laws. So that's another
Yes.
layer of concern that you have to apply into this. And then the other layer is you have to make sure your smart contracts are valid. You have smart contracts that need to be secure, so you have to add in an audit layer, and you have to have audit partners so that that layer gets checked and verified and meets the requirements of what you're trying to execute on. Smart contracts don't do you any good if they're full of holes and don't execute the way they're supposed to execute.
Hmm.
Those are all factors you have to ensure as well. And then of course there's compliance from a financial services perspective. You have to be compliant with the security levels they require. So that's another layer you have to add in as well. And then you start adding in the AI layer. Where do you build agents to automate? How do they interact? At what point do humans need to step in? So those are all factors that you need to also factor in as well. And of course, they produce their own data. That data doesn't get stored on blockchain, obviously, and maybe some of it does,
Hmm.
but some of it won't. And where's that data go? And how's it
Yeah.
stored? And how's it become accessible to that agent? And then the other layer is you add in is which LLM are you using? Are there going to be LLMs that are specific to this use case or this use case or this use case? Do you need to use multiple LLMs? So those are all factors you have to take in consideration as well.
That sounds like a lot of challenges.
Yeah, and I'm not factoring in all the accounting stuff that you have to worry about here.
No, I'm sure. Um, how did the market react, or how did the market welcome your ideas and your products, or how difficult was it to bring investors to the table and find homeowners that would be willing to get into the program? Like you mentioned, there is a different aspect of how you present the product. A
Yeah,
very advanced, complex information that is presented to investors, very dumbed down information to the homeowner because they have different expectations and different understanding of the technology. Like you mentioned, you don't go to a homeowner and talk about blockchain. They're not interested in that. What they're interested is that they're going to get some equity out of their house, that there are some specific specification about what they're getting, what it means for them and their house in the long term, and that they can understand that well. But an investor is a lot more sophisticated when it comes to risk assessment, when it comes to safety and security, and knowing where the data is flowing and making sure that they are compliant with all the laws. So, how did the market react at first when you came up with the idea and presented to it?
yeah, it's a multi-layer response because first of all, there's different types of investors that we look at too. So there's venture capital investors that we look to invest in our business to help us
Hmm.
grow the business. Then there's asset investors which are investing in the equity
Yeah,
portion of the homes, and then there's the homeowners who have
yeah,
to provide the physical, and we call that the supply side, the physical asset, which is the residential property. So let's tackle homeowners first. The acceptance level of homeowners is extremely high. We've had a lot of interaction with homeowners. In fact, we've had a lot of face-to-face with homeowners. We've had several events in the California market where we actually brought homeowners together and talked to them about this product. And prior to that, we talked to a lot of homeowners. We just called people we knew who were homeowners and talked to them
yeah,
about the product to see, did they understand the most basic part of this, that you've got equity in your home and you want to leverage it. So because homeowners see the wealth in their home, they get that there's equity there and they do understand the idea that, hey, I want to leverage this. Unfortunately, the only way for me to leverage it right now is to sell it or to borrow against it. And
yeah.
a lot of them didn't like that concept of borrowing against it. We didn't have to tell people if there's a better opportunity, would you jump on it? A lot of people were like, I don't understand why that's always been the case, and we are a debt-focused society. debt's always the
Yes.
solution, right? You buy a car, debt. You buy, well, you can't even buy a dishwasher
Anything.
without getting it offered on a monthly payment scheme. So we're orientated towards that direction. And because there's a lot of money to be made in it, that's why banks have the biggest buildings in every city you go into. They make a lot of money off this stuff. But from a homeowner's perspective, it's limiting, right?
Yeah.
And I think for any ecosystem to survive and thrive, I think equity needs debt and debt needs equity, right? But right now there's just debt. So homeowners, of our conversations with them, loved the idea and felt that that made sense for them. They
Hmm.
weren't so inclined to worry about how the technology would execute on it. Although some of them did like the aspects that the fact that we do this on blockchain, we fractionalize the HEI, which is the home equity investment instrument, and they can buy back parts whenever they want.
Yeah.
That gives them flexibility. We can also structure it so that if there's money sitting in their wallet, that it earns a return, like about 4%, because they would hold the money in YLDS, which is provenance stable coin. So they get things like that. They understand that. Now you move over to I'll move over to the asset investors. The asset investors see this opportunity because right now credit markets are not great. Interest rates are high. People are not renewing their mortgages. Why would you? I'm locked in at 3.5%, 4% for the next 20 years and longer. That's
Hmm.
why we're not seeing a lot of movement in real estate right now because why would people give up their mortgages? They've got a
Yeah.
great mortgage, right?
Yeah. Yeah.
But meanwhile, equity keeps accruing on this asset. They don't want to run out and get a HELOC necessarily because rates are high on HELOCs. They may not qualify for a HELOC, right? So those aspects are significant. So investors see an opportunity here with funds they've typically set aside for credit and see an opportunity on the equity side. So a lot of the big private equity firms are allocating significant sums of money into home equity because on a long term they see the value. They see home prices continuing to rise,
All right.
and there's a lot of reasons for that. Some of them are socioeconomic. Some of them are just simply there aren't enough people to build homes.
Yeah.
Resource limitations. There's environmental limitations. There has been typically a lack of supply of homes in the U.S. That's not going to improve over the next 10 to 15 years or longer. Even if you convince someone now to become a carpenter and they're, in high school, they're not going to be a full-fledged carpenter for another 10 to 15 years where they can actually be out doing things. So a lot of these factors exist in the marketplace. And that single residential home is going to continue to accrue value. And it's an asset that pension funds, insurance companies, treasuries have to invest in because oftentimes their governance in and around investment says you have to invest in stable assets. You
Yeah.
can't have all your money in Bitcoin or this. You've
No.
got to have
No.
a balance in your portfolio because we're a pension fund.
You want
So
to diversify
yeah,
your
you want to
risk.
diversify, and this is a great asset class. So they're seeing asset investors are seeing the opportunity here. And we've been on roadshows in New York, meeting with a lot of these big private equity firms, and they see the value and they see the opportunity. And for them, it's an opportunity for them to cycle their capital through. And one of the
Okay.
reasons they like a blockchain infrastructure is they can cycle their capital quicker. So you can go from origination to securitization and back much faster on chain with
Hmm.
certainty, right? Because of the data on chain being immutable. So there's that aspect of that as well that they really really like because the faster they cycle their capital, the more money they make on that capital. So from their perspective, they have money, they need to invest, they're mandated to invest it, they need to invest it, and this is an opportunity they see. Venture capital firms, on the other hand, are a lot more difficult to convince because the very nature of their business are inundated with thousands of ideas, some of which are stellar and amazing,
Yes.
some of which are just actually mind-bogglingly stupid. Unfortunately for them, they have to vet them all. And that is a difficult task. So you have to really focus in on the venture capital firms that get your space. They're either fintech orientated, blockchain orientated, prop tech orientated, and focus really on those VCs and build a really strong narrative, build great support material, network, because it's about networking in that space. You have to connect the dots, and if I know someone who knows someone who knows someone, get in with them that way. But you have to back it up with a great business model. You have to back it up with a great team, and you have to back it up with great materials. You've got to have a solid deck. You've got to have a solid data room. You have a solid business model. You got to demonstrate, hey, we can make money off of this. And one of the things we identified really on is that we make money during the whole flow of capital. At every stage
Yeah.
of the flow of capital, we make money there. Not massive percentages, but those percentages add up over time.
Hmm.
They're always there. So that is something VCs like to see. VCs like to see a robust revenue stream that's making money at every stage of the game. And they like to see scale. Can this business become a $1 billion business in 5 to 7 years? Could we IPO in that time frame? Those are all things they're looking for. And if you can start checking those off with a solid business, solid technology, big market opportunity, we've identified the TAM, total addressable market in the US alone, at about $17 trillion, and a serviceable, attainable market at just a little over $2.3 trillion. So those are big markets.
Yeah.
And that data is also backed up too when you look at, Boston Consulting Group's latest research on, the tokenized real estate market in the next 5 years is going to be worth about $3 trillion. And that's a global projection, and I think it's actually on the conservative side. I've seen numbers much higher, but we tend to focus more on the conservative forecast because if you're wrong, great, it's bigger.
Yes. Yes.
And when you look at a market that big anyway, it's far bigger than most markets, $3 trillion. It's a massive
Hmm.
amount of money. I get uncomfortable talking about the global market, which, if you look at the value of all real estate globally, and this is just residential real estate, it's $278 trillion. That's a staggering amount of money, but that's it's the biggest asset in the world, right? Homes, land, buildings. It's a significant asset group.
So do you see in the 5, 10 to 15 upcoming years a a movement from most currently traditional companies towards leveraging those new technology?
Yes, I absolutely do. I think blockchain's got use cases that are very significant that don't just pertain to real world assets, but I'm using the same name as but to verify provenance, right? Um, to be able to say, did that olive oil come from that origin? Did that
Yeah.
food come from that place? You could essentially track it from point of origin all the way to the store
Destination. Yeah.
where it's bought. That is very significant for consumers, particularly when you start looking at our current food chain, which has been corrupted by, you know, uh, genetically modified food, chemicals, additives, this, that, and the other. Now you have a technology that could technically demonstrate and prove to someone, I'm buying this olive oil, it's free of additives, it's real olive oil, there's no
Yeah.
seed oils in it. This wine that I spent $500 bottle on this bottle of wine is real. So those are things that are very, very significant. Also, luxury goods. There's a lot of
Hmm.
fraud in luxury goods. Blockchain could actually eradicate that element of it. So there's tons of use cases from that perspective. And AI too. I mean, AI will be deployed in the workplace, and it will eliminate and displace a lot of workers, but at the same time, I think it's going to open up new opportunities for people.
Yes.
I think it's going to allow people to be more entrepreneurial, start their own businesses, integrate into the system that way, become their own bosses, leverage technology, because it's getting to a point now where individuals can leverage technology and scale a business and make it very successful. So I think all those technologies are going to be impacting the consumer and the economy over the next 10 to 15 years.
Do you see any major risk? Because we will always think about blockchain as being unbreakable, but it would appear that the latest development in quantum computers has shown that they are able to break the blockchain.
And then there'll be quantum blockchain.
Yeah, exactly. So, but without going so far as quantum computing, what do you see as risk, at least in the immediate future?
Well, there's risk in any technology.
Yeah.
I think AI poses a greater risk to humanity than blockchain does. I mean, the risk you have with blockchain is people create systems and businesses that are fraudulent.
Yeah,
You can still do that, right? The technology is not fraudulent. It's the people who deploy technology in a fraudulent way, and we've seen examples of that. And consumers need to be cautious of that reality as well, right? If you're investing in something, make sure you are investing. Just because it's been tokenized doesn't mean you're investing in something that's real.
yeah,
And we have seen a lot of that with NFTs and everything under the sun regarding the early days of blockchain when everything was getting tokenized and there were NFTs here, there, and everywhere, where people were spending absurd amounts of money into these assets and really getting burned. That is no reflection on the technology. So we've got to be aware of that. The word digitization, tokenization doesn't make it valid. It's still the underlying asset that makes it valid. It's the
yeah,
data that makes it valid. So do your homework as an investor and make sure you're investing in something that's real. AI represents a far more greater threat to humanity potentially. We could go down that slippery slope, but I do have concerns.
hmm,
I have concerns that are we deploying it too quickly? What are the plans as we deploy it? People will get dispersed. They're not going to, in the Industrial Revolution, people were dispersed, but it happened relatively slowly, so people were able to adapt. AI will not be deployed like machines were in the Industrial Revolution. It's going to be deployed much faster, much quicker. So
yeah,
what's the plan? What controls are we putting into place? As people give up, as people give up not their rights, but if people give up their ability to execute on things to an AI agent, that AI agent suddenly gains control over data, personal
yeah.
information.
And the result.
Yeah, what controls are you putting in place, Mr. XYZ or Mrs. XYZ, to make sure that AI doesn't corrupt your life and take over your life? And then further afield, how is that technology going to be deployed by governments? The problem is that we have first of all, we have competing corporate entities that want to develop the best AI. And then we've got countries that want to develop the best AI. We're not all aligned. It's
No.
competitive. Capitalism is playing a role in that, which is the economic system we all leverage and use. So, what's happening on the other end of the pond? What are the Chinese doing? Are they going to deploy something that's potentially a threat to us and vice versa? These are all things that we're not thinking through. We're rushing to get to the best AI.
Hmm.
And doing that, what dangers are we creating? AI, they say AI will be benevolent towards humans. And I'm like, we're not aligned either. When you think about it, AI is driven by knowledge. We're driven by consumerism. Not that we're not driven by knowledge, but the underpinnings of why our economies thrive is because we're consumer orientated.
Yeah,
AI doesn't care about that new couch or car. AI is purely information and knowledge driven. However, both require energy, right? AI still needs copious amounts of energy.
oh yes.
Consumerism and existence as a human being requires energy. So that's where we compete. And we would both be competing for energy, but we're not aligned on the top line. Consumerism and knowledge, wealth of knowledge and gaining more knowledge and exponentially accruing more knowledge and becoming faster processing things is where AI sits. So there's going to be some bumps down the road. I
Yes.
definitely think we're looking at a golden age where AI is deployed across various spectrums from health to business and so on and so forth, education, where it's going to definitely help people. But then what happens when we get to that next level? When AI essentially becomes smarter than we are, and we're suddenly the chicken and they're the human, from a difference in IQ perspective. It's going to be pretty significant when that day happens. How will it look at us? Will it ignore us and just move on, or will it look at us as a threat for resource, which will be energy, or will it create an unlimited source of energy and not worry and continue on its own path? It's a very hard thing to predict. My biggest concern is that can it get deployed to create dangerous weapons, viruses by a nefarious or badly intended government.
Hmm.
We all
Yeah,
know,
we
yeah, we all know they exist, right?
They do, and I remember watching a documentary on how a biotech company was able overnight to ask their AI to create biological weapons, uh, and they said it was incredible what the AI was able to come out with in a short amount of time,
Yeah.
and to create those modification in biological weapons. And if it falls in the wrong hands, that's definitely a problem. But at the same time, AI can be used. We see today in healthcare, it helps find new ways of taking care of people. So we just have to have a strong, not I wouldn't say regulation in place, because when we say that, it scares everybody. But we need some sort of regulation that uh, protect us from those bad
Yeah.
actors.
We need, and we need a globally accepted governance model by how AI manages itself, regardless of where it's being applied into.
Yeah.
And hopefully we can get governments to agree on that. But there's always going to be bad actors, right? And that's the underlying problem. So
It does.
I'm hopeful. I tend to be a realistic optimist.
Hmm.
Hopeful that we can figure this out and that we do have a bright future working alongside AI and the technology is deployed in a way that benefits AI and benefits us.
Yeah, society.
Yeah.
Well, Michael, we're coming to close to an end. Any last words or insight you would like to give our audience about your industry and its future, or the technology behind it?
Yeah, I mean, obviously super optimistic about the future of the space and future about what we're doing as a company. People can go check us out on our website, www.vestaequity.net. They can follow us on X at
Hmm.
Vesta Equity VPM. And also, if they want to follow us on LinkedIn, they can do that as well, and Facebook. My belief is that there's a great future ahead for humanity, despite the potential dangers. As I mentioned, I'm a realistic optimist.
Yeah.
And I think there's a bright future ahead. There will be displacement, there'll be bumps, which is normal, but we guys can keep our heads level and say it's going to work out if we focus and we build smart technologies, we leverage technology in an ethical way, and build a better future. For I want to build a better future for my children. I want my grandchildren and so on and so forth, and the next generations to benefit. And one day we will have colonies on Mars and be traveling into the stars.
Yeah.
Be some great things ahead in the future. Maybe it's a Star Trek future.
Why not? Why not? I love Star Trek.
Yeah, we're exploring the universe. I think that would be great.
It
So
would.
I think
And
we
there's
can get
always bumps on the road.
yeah. There's always bumps on the road. Yeah. But thank you for having me on the show. I really appreciate it. I love talking about what we're doing and talking about the future.
Well, I really appreciate you coming on this podcast and giving us some insights on what you're doing and the market in itself, the industry, and what the future holds for us. And I hope that everything continues to go the way you want, and that your company can prosper from it. So thank you again, Michael,
Thank
and I'm
you.
going to wish you an excellent day.
Thank you.
Bye bye.
Bye bye.